Hey everybody, it's just about a quarter after U2 UTC. Market's opening up in 15 minutes near Stock Exchange. Doing a really quick update just to give everyone a heads up for this kind of early session. So first off, we do have some data points coming out with global ISM services, or S&P global services and global manufacturing. And then existing home sales coming in at about 45 minutes. The BOJ interest rate did raise by 0.5, so just watch that. That's was traditionally, especially back in '08, considered a very bearish part of the cycle. But overall, still looks good. Longs over shorts, we've got lots of people smashing the red button. We are majority short. This is exactly what we want to see. Coupled with that, we also have funding rates. Combined funding rates now 0.0048, well underneath the 0.01 kind of standard. So that looks good. On the liquidity side for the heat map, just looking over the last 2 weeks, we've been in this pretty tight little move. We are about at the end of it. I think we're about to have the big volatility move. It's actually pretty simple, in all honesty. We either hold like the local stuff down to what we did at 101, or we start flushing it down towards 95, 94, probably even 92K, 91K. To the upside, because we do have funding rates looking quite good, and we have the long shorts looking pretty decent as well. I would say any gain of 106 gets you into that sweet spot to have a pop back to the all-time high to grab that liquidity at 110. On the liquidation heat map, we've got some spotty orders coming in, nothing too crazy in all honesty. Still pressure on both sides, expecting some movement today on Friday. If we go flat and sideways, we might get some craziness over the weekend, which is not traditional to us, but I would expect that there's too much local liquidity, as we just saw, for us not to have a kind of a bigger move. And then the biggest thing here are kind of key levels based off of what's resting on the order book. 106, obviously, that's going to be a big one. If we gain that, I want to see tests up to 108 and 110. If we go down to the downside, 104, we do have the daily open down there. So you lose the daily. This is 104 is effectively the local mid-range. If you lose that, you're definitely targeting kind of the low structure at 102K, potentially even 101, where any loss of 101 is what gets us to start breaking 100K pretty aggressively. So looking at the structure itself, very simply, we are still in this kind of squeeze structure. This has not changed at all. We are still in it. You're welcome to try and keep shorting the lower highs and longing the higher lows. I'm still hedged right now. I'm not waiting. I'm waiting for one side to have a clear and concise breakout. Realistically, you gain 106. You should see a sweep back up to test the high structure at the previous all-time high at 108.4. Same thing to the downside. If you start losing the daily open, that's a nice 4-hour swing structure. If you lose that, we need to come all the way back down to the lows at 102K, where we should see sweeps if we start breaking below 101. Losing 101 breaks the structure down. So we're at the end of it. We're at these 2 points. I'd say the easiest thing here is set an alert at call it 101.2K, and set an alert at 106.1K. So whichever side gains first or loses, that's going to be the direction of travel. We're going flat and sideways, but lots of great stuff coming out in the last couple days with the inauguration, with all the executive orders from Trump. So it looks fun. It looks fine. It looks dandy. If we do break the weekly, I think we should start sweeping stuff back to the mid to low 90s. We have plenty of room to run to the upside. So keep an eye on it. It's interesting. It's fun. And let's see what happens when we go into the weekend structure. So that's it. Take it easy and catch you Monday. Peace.